How's everybody doing? Ricky, how we doing? Ooh, right there with you, Lambos. I was all I scalped the only bit of that downside move I got was basically this one. I got some puts on this breakdown, didn't trim them here, got a nice candle, was all out. Didn't know we had 5 more bucks to go, 6 more bucks to go, whatever it was. Yeah, that was good. I actually got a nice bounce here. Caught this nice bet, caught this whole bounce too. Uh, and then at that point, the news was just flooding in, and it was like, nope, quit buying calls. There's no point to be buying any more calls here. You know, news is too bad. News is not what people want to hear. So at that point, it was time to get short, but I was basically done trading. And then when I just would glance back, and it was just dollar after dollar just shedding. Yeah, was a truly wild one, man. I hope some of you were able to, take advantage of that. That thing that's not normal, you know. It's always funny when you look at when you look at your chart, and I have faith in my levels, I trade my levels every single day. And when you see things like this, where like slice through a level, maybe a little bit of a bounce and just start slicing more levels, that's when you know that selling pressure is just getting absolutely ridiculous. And there's really no point to be trying to jump in front of it. Once you see it slice through big numbers, like it didn't even stutter at 520. 520 any other day would have done something. And for it to not even slow down at 520 and just continue the dump through 519. I mean, when you see that kind of thing, and I love to catch a bounce or, like big old push up. I love to short the top of it. But this was one that was pretty dang apparent. They were not going to let up. Welcome, welcome everyone. Hope we're all doing good. Got more people rolling in. Oh, Raymond Reddington in the house, dude. Good to have you. Yeah, Lambo straight up just hot knife, dude. Just slicing. Uh, no. This is where if you weren't hedged, you sad, Rudy. This is days like this are why you hedge your port. Like I mean, I like obviously we're bull market, like big sell today. If you deny that, you're insane, but we have been stuck between 505 and 520 for a long time, we're still within this range. However, when we were up here and you were seeing all of this consolidation, failures to break out, this is where you might want to start looking to position into some shorts, just to cover. Like, if you're long and you're seeing this type of movement, you might want to hedge that position a little bit. On the chance, I mean, obviously you should never, ever, ever expect a like 1% green day to flip to down 1.2% red, but that's why you want to have a hedge on when we come to those inflection points in the market, those all-time highs that we just can't get by sort of thing. That's a great time to throw a little bit of money at a put and hope it makes you some money. And today, man, they made money in spectacular fashion. But I always just try to look at the big picture. I won't be surprised to see a little bit more down, but this 512 again, barring some more news, really great place to start looking to take a stab on that bounce. Another one that I was really looking at, IWM. I mean, all charts look the same today, but when we were talking here a little while ago, last week, somewhere over here, I was really hoping for this pullback down to the back, this top of this, this was that huge weekly breakout. I'd love another test down here to try to get long on some of those small caps. But the trick of that is, at least part of this reaction today was due to like rate talks. And we had one of the typically hawkish Fed staying hawkish, but then we had the flip-floppy Fed kind of sounded more hawkish than dovish this time. So it really just exacerbated the sell. And when you're looking to hit small caps, you don't really want bad rate news coming out. You want good rate news coming out. Welcome everybody. Hope we're all doing good. We'll give it a couple more minutes, see if a few more people want to show up. I know attendance has been low for most everybody lately, so we'll just see how many we get tonight. But hopefully everybody's doing good. How'd we all do? Everybody have a good day. Hopefully made some money, or at least if you took a loss, hopefully it wasn't too big. I say it all the time. I'm terrible at trading days like this. I just don't. I don't chase. I don't like to chase. And so there was, you could make an argument for some short entries here. Could maybe make one here, but for me, I just don't trade this kind of thing because you don't know when like the other news can come out and it can fly us right back to green. Obviously didn't happen today. But I just don't like to trade this kind of stuff. I do terrible at holding for those kinds of trades. So like I said, I got this. I was happy with that. SMCI thoughts, who knows? No float available. Things going to keep moving like crazy forever. No reason to bet against it though. As I read more and more into the company, pretty good company. They're doing an important thing. Don't really see them going anywhere. But as long as 80% of that float is tied up, it's going to keep on moving like a madman. What caused the sell-off today, man? I think people being ready to sell, book some profits. A lot of those the people who are starting to build in long last year, beginning of last year, they're sitting up in huge profits. So we had a market that moved, God, I don't remember where we were beginning of last year. 400 maybe. Let's see, we're gonna have to zoom out even more than that. Beginning of last year, trading at 450, God, you get an $80 run or whatever it is. You get that $80 run on SPY. Those people they've moved into the long-term capital gains tax, so better tax bracket, blah, 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 better tax rate and everything. So yeah, I think people were a bit ready to sell. Then you slapped on some potential Ukraine news, slapped on a bit of Israel news, slapped on rate talks that were a bit unexpected. One thing led to another and market dumped. Okay, in just 1 second. So yeah, it was just big old compounding thing of a bunch of stuff happening and caused a really big sell. No denying the big sell. You guys know me, I love to swing calls on a big old red candle, love to swing puts on a big old green candle. But today was a day where I wasn't taking the that counter, the contrarian trade. I just wasn't feeling it. Super bearish candle, no denying that. And so while I won't be entirely surprised to see a little bit of continuation, I'm still not expecting this to be, the beginning of the end or anything like that. And we have more important, job creation data tomorrow. And so, in my opinion, that's really going to kind of set the tone for us. Of course, if we get any more news overnight on, either Israel, Ukraine, and Russia or rates, that can, of course, have a positive or negative impact on it. But I will be, if we pull down to that 512 level somewhere around the open, I will likely be looking to try to buy that dip. Yeah, they ain't doing a whole bunch for us. Hopefully this isn't going to be the dip down here. But we'll just have to see what happens. Rudy, nice green day for me. And yeah, nice green day for me. As I said, I mean, I was long, on this day I made money being long. That was, that was the story of my day. Like I said, my only short was right around here, giving up that opening range. And by this point, QQQ was also catching up to the opening range. That, so that was, that nice technical reason, especially with some news backing it to try to get short. But like I said, I just, I do terrible on days like this. Don't like trading them. Explain the big wick. This guy right here. Yeah, we can talk about him. QA, why not? It's a fun topic to discuss because frequently there won't be volume to back them. They also, if you're in like an option contract, as an example, you don't see this profit. This is never, like if you say you were trying to scalp some 514 calls into that close, your 514 calls are never going to show $5 in the money. So it's a big discussion of what actually causes these wicks. Nobody knows for sure. But a few of the accepted things are that's dark pool. Which for anybody that doesn't know what dark pool is, it's another exchange that very big money can use. And it's a way to transfer large amounts of shares without affecting the market. If a billionaire, whatever, multi-billion-dollar hedge fund wants to place that, $500 million or $1 billion or whatever it is order on something like SPY or QQQ, if they were to do that midday, it would affect the market in an insane way. That amount of volume happening. So what the dark pool is, some people think it's shady, but it's more just a way for hedge funds or short sellers or things like that to move around large positions of shares without, either negatively or positively affecting the market. So it kind of, while some people think it's really shady, it's more used as protection for us. Because if they could just make those kinds of gigantic orders midday all the time, and dark pool orders do come through midday, but again, it's not really reflected in the volume. So a dark pool order can come through and you might see this wick because when that dark pool order was placed, it could have been somewhere up here, 519, 520. So that's where we wick to as those shares come back into play in the market. Another one that I've heard explained is it's exercises going through, because when you exercise a share, it's a different form of purchasing. It's not really reflected in the volume. And so this can just be exercise shares coming through. Big discussion on what they are and do they matter and things like that. But generally speaking, when I see a really big one like this, I see a $5 wick on SPY or, whatever this is, $6 wick on SPY. I will take note of this. If we come back to this 519.70 area, that someone with a whole bunch more money than you have had interest right there. So it's worth paying attention to. Oh yeah, man, those ones ended up hitting. Those ones ended up hitting real nice. I gave a good one today. Again, hilarious enough. We'll just go back and talk about it. We're just chatting QA day to day, Right around here, I posted this chart in my tab and said, double bottom. Uh, oh no, I think it was on QQQ. I don't know. I'd have to. Oh yeah, double bottom right around this trend on QQQ. And these things ended up going on a ripper. I think I did 120% on my runner, something like that. So that was a real nice one, Raymond. Wish you would have got them with me. Yeah, Josh, there's a lot of heartbreak and things. Some things we're putting in. God, just nice moves. And I'll tell you what, if you were talking to me right here and I was DMing with somebody, they could be in here. Shout out you if you are in here. And somebody was asking me about puts. And I said to him, I was like, nah, man, this market wants to rip, like generally speaking, yes, I would be trying to short, any sort of double top up here at the opening range. I was like, but this market, it's got legs, there's buyers everywhere, they're buying everything. I'm going to show you guys something after this little talk. I was explaining to them like, hey, they're buying everything. Some of the buying is going away, but for the most part, they are buying the market today. So I have no interest in being short. Little did I know that we were going to dump $10 or whatever, $8, whatever it is. I didn't know how much we were going to sell, but the market was saying it wanted to go until that news came out, and so there's a lot of heartache, there's a lot of big runners on calls and some gigantic runners on puts today. With the big wicks, do they usually fill? Yeah. I mean, but it's not a trade, like it's not something to trade around. Like if you see that big wick, don't go diving into some short expiration 519 calls, you don't want to be that far out of the money. You don't want to trade based on those. But yeah, I mean, those wicks eventually hit almost always. And just think of it as a big level. We actually have a guy in here. I wonder if he's he comes to my lectures a lot. He's been trading those dark pool levels, scum dog. I don't know if you're in here, but he's been trading those dark pool levels on Apple and been doing ridiculous. And so you can do very, very well trading around those things just because somebody with a lot of money had a lot of interest right there. But so just to, because we're Q&A and just to show you guys something. So this is ADD. And you do money sign ADD. And so it shows you it's advancing and declining difference. That's what ADD stands for. And so it shows you big picture in the market. Are more stocks going up, advancing, or are more stocks declining? And so you can see it's got really weird numbers over here. This is just, you don't need to so much worry about most of the numbers, but something you always want to take note of is zero, give or take. And so when we come to zero, that means basically half the market is being bought and half the market is being sold. If we're way down here, then that means, there's more selling pressure in the market. If we're way up here, there's more buying pressure in the market. And so we can see over these last couple of days, we went from pretty heavy selling in the market to relatively strong buying in the market that ended up obviously turning around really, really bad. So a lot of the times when, I get asked questions, DMs and Trade Floor and stuff all the time of, what are you thinking on the market? ADD is something that I'm always going to take into, my consideration, just because it's a really nice, simple way to get a big picture on the market and say, they're buying, like they're buying the market. That was even yesterday when we were getting some nice pushes yesterday. And that was even yesterday. I saw us push past this zero early after being sold pretty heavily. They were buying and buying. So when you start to see, and you never want to use one thing for confirmation, of course, but when you see, strong buying on ADD breaking over this zero mark, you can kind of assume that they want to buy some things in the market, and it can be additional confirmation to maybe try to buy some dips or whatever you're trying to do. Complete other way, when we've been buying strong in the market and we get a nice big sell-off and we continue to see selling, that's when you can say, oh yeah, I'm going to try to be short and rip still, because most things in the market are being sold. So ADD can be a super, super powerful tool. And then of course, on a day like today, we can see when you're starting to see, and this isn't, I have EMAs up, but that's only because I didn't turn them off. The ADD is not something, it's like, VIX, it's like all of those other like instruments. You don't do technical analysis on VIX. You don't it's just not, it's not what it's made for. It's not how it works. Same thing as ADD. You don't want to be trying to chart like a bull flag on ADD. You want to look at ADD and say, hey, these are big red candles showing strong selling pressure. That's how you want to do it. Even back here a couple of days ago, this one, I think this might have been Monday. Yeah, on Monday. This was a nice bounce in the market, and we had been selling, kind of broke some highs, and then started seeing strong buying. So even though we're down mostly, we're down in the market, we can still see here that they're buying the market. So it's a good place to, try to catch a little bounce. And then as I recall, I mean, if we look at SPY, as I recall, we did end up catching that nice little bounce, early in the morning for me on Monday. Oh yeah, somewhere right around here. I think this was the bounce, or this was the bounce, one of them. So nice little bounce when you saw that buying show up on ADD. But yeah, Shanks, how we doing? Yeah, that was I think that was probably about that double bottom on QQQ. That was a good one. That was my good trade of the day. You know, nothing else was too crazy for me. Yeah, you hate Tesla? Good. Yeah, me too. Everybody hates Tesla. Look at that run that it looked on. My poor Tesla bottomed, you know. Everybody laughs that I got charts with levels of everybody, but I'll put my bad call outs on there too. You guys can laugh at me if you want. Right here is where I said Tesla bottom. It was also making fun of Zach, but you know, it is what it is. But yeah, this Tesla, man, it made people real excited and then broke a whole bunch of hearts into the end of the day. And calls VIX levels slap. Ha. Um, so ADD, like I said, you don't really want to do TA on it. And you know, we can talk a little bit about this if you want, if people have questions about ADD. So ADD, you don't want to do TA. You don't want to look for bounces. You don't want to, you know, say, oh, you know, ADD's coming into -1,000 support. Like that's not how ADD works. What you want to look for on ADD is just very big picture. You know, even like you can even look at it at the hourly, like it doesn't matter. But you don't want to be doing TA on it. You want to look at it and say, kind of big picture, okay, most things in the market are selling, we're below zero. Most things in the market are buying, we're above zero. Kind of use that as your bias to say, okay, dips might be buyable, bounces might be shortable. And then you want to look for these, you know, these types of, not necessarily, I mean, this one's huge, but big noticeable candles where you can say, oh, look, they're buying, you know, like all of a sudden we went from, you know, you know, all of a sudden we went from 275 stocks being on the upside of just what ADD tracks. And it tracks the New York Stock Exchange. So a lot of things, you know, you know, we went from 200 up to 600. You have to think that that is, you know, we had 400 stocks flip buying heavy. So you have to think how many like hundreds of millions of dollars it takes to do that. And just analyze the candles and say, oh, they're buying it. Oh, they're selling it. That's it. You know, like today, we could see in ADD, if it's something you watch, just momentum picking up on the selling. And so you don't jump in front of that train if you don't want to, if you know, if you're trying to not get hurt. Oh yeah, Raymond, did it break your heart? W VWAP and M VWAP. I have to be, you know, I'm full honesty. I don't know what those are. Do they have those on Thinkorswim? I'm assuming it's like a weighted V. The W VWAP might be a weighted VWAP from a point where you start the VWAP, but I doubt we're gonna unless WVAP, unless that's a typo. I can't tell you about any of those. And so, you know, I'm always going to be honest. If I don't know, I don't know. I can tell you about VWAP though. Oh, see, anchored VWAP. That's what a lot of people call it. I'm wondering if that's what one of yours is talking about. And an anchored VWAP, you actually draw it from a point. I've never used it on Thinkorswim, so we'll see how it works out for us. But let's check it out right now. So an anchored VWAP, what kind of options is it going to give us? Generally speaking, you are going to be able to, yeah, see, this one's not, you'd have to type it in. A lot of the time, what you'll do an anchored VWAP on, you'll be able to draw it yourself. And so you would say, where is that volume weighted average price from here to now? You know, so you can do it a more specific time frame. You know, like a lot of people were running those anchored VWAPs off of like the COVID lows and things like that. Whereas a normal VWAP is just going to be, and I use it every single day. You'll see it in my tab. A normal VWAP, and for anybody that doesn't know, when you do use a VWAP, it's going to pull up additional bands. That's what those ones are around it. I always turn those off, the upper and lower band. But here is the normal VWAP. And so what VWAP is telling you, oh yeah, so VWAP, okay, good, I'm happy. So we can talk about that. What VWAP is telling you is based on volume, where is the average price of shares being traded right now? So how I like to tell people to use VWAP, and that is, you know, and this is a simplification of it. Always think of it as like an EMA or support and resistance. You know, VWAP is generally speaking going to be a strong level. You'll get a nice reaction around it. But a really great way to use VWAP is to say, if we're below it, there's a good chance you want to be looking to short bounces. If we're above it, there's a good chance you want to look to buy dips, because we know, you know, from that line, based on the volume, the average price that people own shares at. So if we're above that price, people are making money and they're happy and they want to buy. If we're below that price, people are losing. Well, you know, longs are losing money, shorts are making money. And so they're going to want to keep selling it. You know, the shorts are going to want to take control if we're below it. And so I use, a lot of people, they ask me, you know, how do you build a bias on the day? And well, I'll just show you my favorite way to do it. Today's, of course, one of those fluke days. But my favorite way to build a bias on the day is based on two indicators. You know, just for simplicity. I'm going to pull up the chart. So this ugly stair-steppy one, this is actually an hourly 20 EMA. And so it's, you know, just the 20 EMA from the hourly chart, but it's being shown on a 5-minute chart. If we are above the hourly 20 EMA and above VWAP, I'm looking to buy dips. If we are below the hourly 20 EMA and we are below VWAP, I'm looking to short rips. If we have them really separated out and we're between them, then I start to treat the day like a range day, because, you know, people are up over the last hour or the last, you know, 20 hours, but people are not necessarily up based on volume. You know, a lot of these shares were bought high and now they're underwater. And so when I see that kind of thing, you know, there's going to be some push and pull from both the bulls and the bears. However, on other days like this, we are above hourly 20. We are above VWAP. We buy dips all day long until we get stopped out trying to buy those dips. But you buy the dips on days like this. And then let's see if we can find a nice down day for us to show the other side of it. Here we go. And this one's nice because we were above it, but consolidating. And you can kind of see we were trying to be above, trying to be below, staying between these. Finally gave it up. We're now solidly below both of them here. So we look to short any bounce, short any bounces that you see until, you know, maybe you get stopped out on this one, but short any of these bounces. Then as the next day comes, you can see, you know, they really sold us off some data. You can still be looking to short those bounces because we've sold so heavy. Then market kind of comes up into here, in between them, we start to see range activity. We have no interest in trading at that point. You know, if you aren't a scalper, you hate this, you know? So use that hourly 20 and use that VWAP to kind of help you build bias. And again, you know, like today's a prime example. Like, yeah, we were above them. And if you just stayed long and didn't, you know, admit you were wrong, you got so blown out of the water, it's ridiculous. So it's not some foolproof method or anything like that. It's just a really nice, you can glance at both of those indicators, say, hey, we're above them, we're below them, we're between them, whatever it is, and kind of have an idea of what you might be able to do. Josh, yeah, we can do trend lines. I see another thing about VWAP though. Yeah, very good point. VWAP, very, very good stop loss point. Of course, when we're ranging or anything like that, you know, all EMAs, VWAPs, all of that stuff are not so good as far as you know, trading on range days because they'll give so many fake outs. But if we're on a nice trend day, you know, you're long above, that one's not so good because the pullback was dramatic, but you know, we're on a nice trend day, you're long above VWAP, you can start to use, you know, if you've bought this break, you can start to use VWAP as your stop out as it moves up. So it can be a really, really good one. And then, yeah, if you are trying to buy these dips down here looking for a bounce, it can be an excellent profit target as well. Go over how I make trend lines. Yeah, so major trend lines always on the daily. You know, just to start there, you know, mark those, you know, what makes a trend is higher highs, higher lows, lower highs sort of thing. That's all, you know, that's all it takes. So take note of these. And trends do change. Daily trends, you can obviously adjust them a little bit. However, intraday is where, and I'll just take off all these indicators so we're just nice and clean, intraday, you don't want to adjust your trend because you might stay in a trade you shouldn't stay in. You might be like, oh, I'm in calls, I buy this breakout, and then maybe you bump your trend out. Oops. You're in calls, and so you've bought this breakout, but then it starts rejecting. Well, maybe you remove your trend, and rather than what the real trend was, this one, the breakout you bought, well, now you bump it to here. Now you bump it to here. Well, now you bump it to here, and suddenly, you're working on the breakout. And so you hold through all of this and lose money when really you should have bought the breakout, scalped it, and then let the consolidation happen. So all you need for a trend is 2 touches, technically speaking. Sometimes a trend will have, 20 touches. Sometimes a trend will have 5 touches. Sometimes a trend will only have 2 touches. But all you need for a trend to be a trend is we have a high here. We now have a lower high here. You can also draw the bottom one. We have a low here. We now have a lower low here. So you can draw this and you can look at it that way. I don't trade name patterns. I don't trade falling wedge, rising wedge, bull flag, bear flag. I don't trade that stuff. I just think of them as trends. If we break it, I long it. If we break it, I short it. I just try to keep it really, really simple. But as long as you have touches to those lower lows, lower highs, whatever it may be, you got a trend. You don't have to be, there's nothing super fancy with them. One way that I love to use a trend that I'll always take note of, and I know Flips does this a lot. I know you guys always want to know how does Flips hit those early morning trades. One of his favorite ones is look at a pre-market trend. So we got a high here. We have a lower high here. So here's a lower high. So we have a trend going right into the open. I'm not saying people should trade that first 5-minute candle of the day, but if you are trading that first 5-minute candle of the day and you see we're breaking this trend on volume like this, you can look to kind of, scalp some of those calls long right away. And so those pre-market trends can be a very, very powerful tool. But if you just want to draw a trend, you need some lower lows, some lower highs, higher lows. That's all you need, and you're good to go. Rudy, so I trade same days, that's what I trade. And most people should not trade same days. If you don't have a pretty good understanding of how the Greeks work, you can get really, really hurt. And that's one of these issues, when you're trading SPY or things like that really early in the day, these contracts are going to be very expensive on this first candle of the day. And you might get this sort of consolidation and you might be getting close to break even because they are going to lose a lot of value because there's so much implied volatility early in the day that this kind of chop, even just for 15 or 20 minutes, can really, really hurt your contract. Of course, this one ended up paying, but it doesn't always go like that. So what I recommend to people is trade those next day expirations, because if you're going to trade it, then you won't, and I can't say you won't ever, because there are times when you will. When you trade those next day contracts, you aren't going to see 1,000%, generally speaking. However, you're going to have defined risk. So let's just say you buy calls, mid candle when it's breaking this trend because you see the volume, you think it's going to push whatever it is. I'm not saying that's right or wrong. We're just using an explanation. Well, we're just going to put some lines on here, pretend we're the best ever because hindsight trading. 517 or 86. We know our stop is down here. It's a 50-cent stop. And you're looking for basically a move up to this level. It's a basically 1-1 risk reward trade. However, on a next day expiration, this is only half of a delta. So if you have 40 delta, you're risking $20 to basically make $20 on a trade like this. Of course, it ends up paying more. We're ignoring that for now, but you get to say, hey, I'm risking $20 to make $20. And so on those next day expirations, you will know that risk. On a same day, this little candle right here might pay you 40% or something like that, but it's going to be much less safe. And this chop is going to eat up a lot of that profit. If you're in a next day contract, well, you're fine. It's not even going to be affected by this. You're still going to be as green as you were. So I highly recommend trading those next day contracts because it just gives you a little bit more safety. As I said, you typically aren't going to see the 1,000%ers, but you can see some very, very nice gains on a next day contract. Yeah, and just to say that second part of what you're saying, you have to be correct fast or you get burned. That's exactly right. And that's why me and Flips and all of us that, trade actively, trade heavily, trade the markets every day, not like swing traders, not that kind of thing. Entry is everything. A good entry is key to being successful in trading, in my opinion. If you're taking bad entry after bad entry and all your trades are going minus 20, 30, 40%, you really need to analyze your entry plans, because in my opinion there's something wrong if your plays are all getting that beat up. Shoot me a DM and let's work it out and let's figure out what's going on. Not you, Rudy, this is to anybody. Jerry, I got no idea. And Jerry, is that you, Jerry? Jerry? I actually got no idea if there is one on TradingView. I use Thinkorswim, and then that's actually a custom script I got from Toasty. I don't know if he made it or what, but I got it pinned to my tab if anybody wants it. Good question, successful trader. So this trade that we're talking about right here, is this is one where, this is a high risk trade because you're buying this breakout as it's happening, which is always going to be risky entering mid candle. The preferred trade on any sort of, trend, at least in my opinion, let me see if I can find one. Of course I can't find one because of this market lately. So let's see, I'm probably going to get one here. Something like this. Yeah, something like this. So I still really don't like this one. Basically, the preferred trend trade is always going to be a breakout candle, and then the next candle pulls back, and you buy calls here. You buy calls when this candle is red. So the breakout followed by the retest. You hear a lot of us talk about it. The breakout retest typically going to provide you a better trade because it is the market. And, don't get me wrong, hedge funds, stuff like that, they aren't looking at trends. They don't draw trend lines. Their orders are literally what make the trends, so they don't need to look at a trend line. But when it breaks and retests, that is the market telling you, I'm ready to break out. That's what a retest is telling you. It broke out, and then it's saying, well, did I really want to break out? That's what a retest is. And then if the retest holds, you go. If it fails, you stop out somewhere down here. That's all it is. So the ideal is always going to be a breakout retest. I wish I could have found a better example than that, but I was just trying to cruise the chart quick. Oh, Flips. We got Flips in the house, dude. Good to have you. I hope I didn't miss him. It looks like he's gone already. That guy. Tricky guy. Well, Flips, thanks for being here. Mouth Flip, same days, baby. That guy, dude, Flips had a damn good day, dude. I know he did. I know. I wasn't in VC with him, but I'm sure it was a rip-roaring good time. What delta will I not take on a 0 DTE? So that's a really loaded question, because certain things like NVIDIA, you can handle to be a little bit, and I'm not promoting like buying $100 out of the money NVIDIAs or anything like that. But when you have a stock that very easily moves, $5 or $10, you can handle a lower delta because gamma is going to increase your delta. However, if I'm trading SPY, I wouldn't be caught dead in the same day with anything less than 25 delta, something like that. I'm never going to go more than, like, if we're trading at 519, there is zero chance that I am trading anything past a 521, and 95% of the time I'm in a 520. have that higher delta so you get paid a little bit more money wise on a smaller move. Of course, the further out the money contracts will be higher percent, less dollars. Uh, Josh, very difficult question. Regarding theta. For anybody that doesn't see this question, it's how do you calculate theta midday? So theta is tricky because it increases, the rate of theta decay increases the closer you get to expiration. So if you have a couple weeks of time, you can just look at the theta and say, hey, that's, I got, whatever, I got $10 theta. That means that over a 24-hour period, that contract will lose $10 if it just sits there. Now, if you're on a same day, you can't really just look at theta because the contract, if it's not in the money, is going to be at 0. And then for every 1 cent it is in the money will be $1, So if you have a contract that ends 10 cents in the money, it's worth $10. But theta is trying to get it to 0. Gamma is also at its highest, and delta is pretty dang high. So looking at theta really doesn't give you a lot of information that you need midday. Because your theta might be 50 or 40 or whatever, but it's going up, it's going down, it's moving all day long. So you just need to know that the closer you get to expiration, the more it is going to hit you, and eventually getting it to 0 at the end. But as far as using it intraday, it matters a lot less, at least in my opinion, than delta and gamma, the two main ones that people should really be focusing on. Nice, Rudy. Cool. Uh, AMD at big support on 4 hour, probably. I mean, those chips got hammered. Oh my God. Yeah, it is. Yeah. I mean, if you were going to take a swing long on AMD, today was the day to do it. But NVIDIA might have a little bit more. Yeah, I wouldn't be surprised to see that 850 touched. But yeah, I mean, you're going to take a stab on AMD long. Today was the day to do it. But the issue is bad data tomorrow, and that thing's going to gap down and demolish you. But yeah, very, very big area. This is that range that we've been watching since January. So this area matters. Crazy to see it slice the whole thing in a day, though. Let's see. Oh, Dark River in the house. Love to see that. I gotta say that really technical analysis on SMCI is just a joke. It is, I mean, it's trending down. No denying that. Nice downtrend on it. Got a little wedge going on here. I mean, it could see that 930. If it gets below that 930, you can start to look to be short, but like this was not the place to be swinging short on SMCI, in my opinion. I'd want way more confirmation than that. This thing moves $30 like it's fun. So, not where I would be swinging short. And I would definitely view this trend as likely pretty strong support. But yeah, actually might set up for a trade here soon. Like, I don't trade this thing. That's just gambling. But if it wants to break out, thing could get to running. Let's see. Do I recommend to watch Shadow Flow for a beginner trader? No. I think that there's a lot of other things that you should focus on before Flow. Flow is great, but if you don't know what you're looking at, it's not going to help you. In fact, it's very, very likely going to hinder you, at least in my opinion. As you start to understand, volume, you start to understand time and sales a little bit, level 2 a little bit, trading those support and resistance and trends. Then you can start to use flow as an additional tool of like, hey, we're at what I consider a strong support. So it's a point where you would want to see bullish flow coming in. So you can use it to your advantage, but for a beginner, definitely not the best thing in the world. Ooh, somebody only trades SPX. That's fun of you. Terrifying. Oops. Let's see. Oh, 1K. I like that. Go over some market internals. AMD fudged you today, cornbread. Yeah, that's a bummer. I think it got a lot of people. I mean, it was, those chips were just the early weak ones, but man, it they all just took a clobber, and look at that AMD one is impressive. I mean, even Nvidia just smoked. Look at that thing. I mean, geez, $50 drop, that's huge. That's huge. Uh, what's my opinion on Meta? I don't know. I haven't looked at it. And then we're gonna talk a little market internals just for fun. Let's see. I mean, these are the highs I would be watching. And then I'd be watching here, here. Yeah. I mean, won't be surprised to see it fill that gap. But then again, we can see big buying off of this data tomorrow. So we'll see. Won't be surprised to see it on that little gap. My main issue with it now, if I was going to be trading it, in all honesty, I'd probably be looking to get short on it just because of it falling back into this range. But I just hate chasing a short on a big news day, just like I hate chasing a long on a big news day. Uh, but Meta looks like it could definitely give a little bit more downside and top of the range. I mean, I don't like a $5 wide stop, but any bounces up here to this 514, 515 area, probably worth an attempted short with stops just above it. Don't love the entry here, but any of those bounces could be shorted just to try to play this little range breakdown. Uh, Thoughts on SMH? Well, I hate to talk about it because Shark's in a trade, but I mean, in my opinion, it's sort of the spot to be getting long. Super ugly candle, big news candle though. Unfortunately that everybody's trades got away from him today. I just feel bad for anybody, like, you know, tough day to be alerting longs was all. However, I've been talking to my buddies, and I think AMD, Nvidia, all of those names are setting up for a really nice rip here. And so I gotta believe these semiconductors are going to take a pretty decent bounce, at least sometime over the next couple weeks. Maybe not tomorrow, but I would be surprised to not see some buying come into those sooner than later, personally. Just everything in the market looks like this today. Unfortunately, Shark took his stab a little too early, but dude's got a plan. He knows what he's doing. I I'm not saying go buy shark calls, but I will say that there's nothing I like more than a shark alert at a discount. So because 1K asked about it, we're gonna go back to it because he must have not been here for the beginning. ADD. So he said, let's talk about market internals. We already talked a little bit about market internals earlier, what ADD is, what it represents to us. The other main market internal that people like to watch is tick. And for anybody who's never looked at the tick chart, it's mayhem. The 5-minute tick chart is like the craziest thing that you have ever seen, because this is showing, how many stocks are ticking up, how many stocks are ticking down. And so this was actually an interesting one because I was watching it during this whole sell. And like when you compare the ADD sell reaction to the tick sell reaction, we were getting volatile drops followed by volatile pops, which is not uncommon in something like this. And just to point it out, it's similar to ADD. It's similar to, it has a 0 level, it's got up, it's got down. And so if most things are ticking up in the market, or even we're getting, like, I don't want to say, because these charts are just hideous, but we can see that overall it's kind of going up. That means we're seeing more stocks ticking up in the market than ticking down. And so when you combine these two, you can typically get a pretty good idea of, is a bounce going to come? You can start to look at the hourly ones and say, like, oddly enough, we had a lot of ticking and buying to the upside off of those lows through this whole sell. Interesting thing to note to me, in my opinion. But still solidly below 0. Of course, most things in the market ticking down, understandable, but always another thing worth noting of saying, hey, people are slowing, even though there's nothing slow about this type of sell. People were attempting to slow it down. And so these are the two main market internals that I personally like to watch. But they aren't necessary. I like them, Because I like to look at that type of stuff in the market. It can show us, what is big money doing? What is happening in the market overall? When I trade SPY, I personally watch Apple, Amazon, Microsoft, and then it used to be Tesla, but it's such a slug. I watch Nvidia now. Those are the four main ones I watch to kind of get an idea of like, if they're all moving the same way, SPY is going to be moving that way. QQQ is going to be moving that way. So I watch those ones. Well, you can use ADD and tick as a much broader picture. I'm watching four things. These are watching 4,000 things. And so I like to see, what's happening big picture in the market. One more that I like to watch is the P call. And what that is, and if you're on Thinkorswim, you just do money sign P call, and it's the put to call ratio. And so what you'll see on this, and you don't need to watch this intraday or anything like that, but it's telling you, and how these are calculated, you divide put volume by call volume, so you can see people are piling into puts. So this is another market internal that shows you, hey, what is the market thinking about doing? Even this morning, I know most of you guys trade with flips all the time, so you hear him say things. He was talking, man, bearish flow on SPY, bearish flow on SPY, bearish flow on SPY. When the market was pushing, and he was obviously long, he's a GOAT. Like you can take note of that and not have to act on that. And we can see it here in this P call ratio that they were building into shorts most of the day, and then finally, went mayhem on it. But so for me, the main market internals, and I don't know if you can consider the put call ratio a market internal necessarily, but the three main ones that I watch are going to be tick, ADD, and that put call ratio, because they just kind of give you that broad picture of the market. That was my quick rundown on it. Break down what I look for before I pull the trigger on a trade. So yeah, kind of. The kind of. Because every trade is different, And so what I do before any trade is the first thing I do is I look left on the chart. If I'm trying to play a bounce, if I'm trying to play a rejection, if I'm trying to play a trend, what's left on the chart? Is there, to the left of me, is there supports? Is there resistances? Is there trends? So the first thing I'm going to do is say, okay, am I looking to trade the correct way? Is my bias right to be getting long? Well, once I've got that done, then I do something. I always describe it to people. You need to look at both sides of the trade. If you want to buy calls, make up reasons, or don't make them up, but find reasons to buy them. If you want to buy puts, find reasons to buy them. And so I might look at a trade. I'm going to turn on some indicators to see if I can use these to help me, but as I recall, they won't. So if I'm looking to get into a trade, okay, and maybe I'm trying to play, so maybe I want to play some calls here. I'm trying to play a bounce on this, or I'm trying to play this double bottom. I'm gonna start, yeah, we'll say this double bottom. Again, this is hindsight trading 2020. You got to look like you know what you're doing, even if you don't know what you're doing. But I'm trying to play this double bottom. Well, I'm gonna start looking over here. I'm going to start watching, and I'm going to say, okay, we've broken trend. That's a bullish thing. Now we're consolidating, a lot of things are buying. So I want to look to buy a dip. So now my bias is set. Well, I'm going to look at this and I'm going to say, okay, double bottom. That's a bullish thing. Bouncing the 50 EMA. That's a bullish thing. Holding the opening range. That's a bullish thing. At this point, buyer volume was far outweighing seller volume, even on the sell-off. So that was a fourth bullish thing. So now I have four bullish things in the category. Now I want to look for bearish things. What do I have that are bearish things? Well, we have EMAs above us, but that's kind of a double-edged sword because we got the 9 and the 20 EMA above us. That's going to be our first target on the double bottom bounce, But for bearish things, we have one, and we have some EMAs above us. And so we can look at this and say, okay, my bias is set to bullish. I have four bullish things, and I have one bearish thing. So I'm going to do that for any trade I take. Sometimes it's going to be EMA bounces. Sometimes it's going to be VWAP bounces. Sometimes it's going to be support bounces, resistance, rejections, whatever it might be. But I just want to make sure that I have, 3, 4, 5, however many things in the category of the way I am trading. And I try to do that on every single trade because then I know. And then once I know all of these things are bullish for me, then I actually plan the trade. I say, okay, when we're up here, I say, okay, I want to buy calls as close to this 50 EMA and the opening range as I can. Then, so I know my entry. That's, step one. I think that's the most important part of any trade. If your entries are bad, your trades are bad. Step two, where am I stopping out? So it goes back to what I said earlier. You want to look left on the chart. You want to look, I don't have, this is a blank chart, so I don't have my supports and resistances or whatever's up. But just for an easy one, I'm going to look left over here and say, hey, this is where a breakout occurred. So now I have my stop out. My stop out is a break below here. So I know my entry, I know my stop out. Now I have to say, okay, that's 20 cents below me, and then this is 30 cents above me. Do I want to take that trade? So because this is my first profit target. So now I know my bullish things, I know my bearish things, I know my entry, I know my stop out, and I know my exit. So once I know all of those, there's really nothing left up to chance. I just have to buy it and let the chart do what it's going to do. Oh yeah, cornbread tick is wild, huh? Oh, you did have a good question, 1K. You were just a little late today. What are some tickers that I recommend for a small account? My favorite ones, favorite go-tos, AT&T, Coca-Cola, Pfizer, really, really great one. One name that's been putting in great moves, Hood is a really good one. Used to have cheaper contracts, they're getting a little bit more expensive. And then for ETFs, I really like XLF and XLE. They're going to be much, much safer trades for smaller accounts. Oh, nice. Yeah. And ask 1K. He's got a whole nice list of them too. Um, uh, he has a really, really good one. Oh yeah, and I forgot he did a whole lecture on it too. So yeah, and I mean I've done lectures on it. I've done lectures on it. I think Toasty's done lectures on small accounts. And a lot of my trading, we talk about those small accounts, or slower moving stocks because I like to trade those. So I trade them all the time. Yeah, good question. I watch P-Call when trading SPY and SPX. That's mostly what I trade. SPY, QQQ. I trade those all the time. My favorite things to trade, and so they're what I trade. But yeah, I watch P-Call. The P-Call that I pulled up is not directly correlated to SPY and SPX. That one actually shows you a broader market view. So that's just puts and calls on the market. And so it's a really great one. Wow, is Dark River Bowman or are they just quoting Bowman? Did we finally figure it out? But yeah, I think that was the leading factor of the sell-off in my opinion. Okay, nice. We are through all the questions. So anybody got any other questions? We got a couple more minutes. I did want to say one thing, I hate to do this. But for anybody who didn't see the announcement tab in OOT, I recommend you go read it. One of our favorite longtime members in here, Crash, is going through a little bit of medical stuff. You can go to the GoFundMe. Even a buck, anything you got. If you can, I understand times are hard for a lot of people. But he's just really going through it, going through it right now. Long-term member, one of our favorites. Recommend checking out that GoFundMe. If you can't, do anything, please feel free to share it. I'm sure he would really appreciate it. But with that, that's all I got, unless you guys got some questions. Oh yeah, happy to do a little bit of teaching, do what we can. And as I tell everybody, always my DMs are always open. If you ever got a question, thinking about a trade, feel free to shoot me a message and I will happily look into it for you. Oh yeah, look at that Dark River turning nice. Yep, check out Crash. Crash is yeah, did Spy look prime for another leg up before the news? Yeah, I'll tell you what. I was pretty dang I was pretty dang convinced we were about to go on a face ripper myself, and uh we didn't, you know? That's the way it goes. That's the way it goes. But yeah, I thought we were gonna put a leg up. I mean, I expected a new all-time high today. We did not get a new all-time high today. In fact, we sold $10. But that's the way the cookie crumbles sometimes. Oh, Richie, man, for a while. Options and stuff like I don't know, 8 years, something. Shares a lot longer than that. Red on Raymond, thank you for being here. Oh yeah, that hurts. I mean, them SPX went wild. That's for dang sure. Them SPX went insane. It's one of those it's a lot of money made today if you were on the right side of the trades. That's all I know. Yeah, we probably do. I mean, yeah, I mean, we need, you know, maybe we need the rate cut. I don't exactly know. I don't know what we need to do. I think we need to hold on for a little bit more. I had a good question about opening range. Where is it? Oh yeah, great question about the opening range. I see that, Raphael. So I use it on everything. And what I like to tell, and I obviously take trades off of it a lot on SPY and QQQ, but a way that I like to use it is confirmation. So I'll run it, like I said, I watch Apple, Amazon, Microsoft, and Nvidia these days. I will run it on all of, because these blue lines are actually a script for it. So I draw that green box myself so people can see it in my tab. That's the only reason that green box is there. All my other charts, it's just this blue line. And so a way that I might use it is, say I'm trading QQQ and I'm looking at the four stocks that I watch, and I got Apple, Amazon, and Microsoft broken out of the opening range. I will start to say, hey, QQQ's got a pretty good chance of breaking out of the opening range right now. On the other side, if I see QQQ breaking out of the opening range, but I got Apple, Amazon, Microsoft, Nvidia all within their opening ranges, not breaking out, I'm going to pretty comfortably want to short that breakout, because I don't think it's going to hold. So I like to use it as sort of that market wide confirmation to say, if all these tech names are breaking out and QQQ hasn't yet, it's going to. Or if QQQ is breaking out and none of these tech names are, that QQQ breakout's going to fail for sure. I hope he was still here to hear my answer. Oh, yep, I see his name. Yeah, right on, Rudy. Thanks for always being here. I appreciate it. Time frame that you set it on doesn't matter, but the opening range that I trade is based on the first hour and a half of the day. So it's the highest high and the lowest low of the day. And so, just to go back to this trade, this was the lowest. So here's the highest high of the first hour and a half of the day. And then as of right here, this would be the candle where the opening range was technically set, but this was the lowest low. So that's how I can, a few candles before it happens, start to look for that double bottom bounce on the opening range for this trade. And it's just by setting that highest high and highest low, and then it's based on statistics. And what that is telling you is that there's a 90% chance that high or low of the day has been set, in that first hour and a half of the day. Then if you start to break out or anything, you now have uh I think it's a 70% chance that, if we've set this high, now we're down here and we're breaking out or whatever, or we're down around here, we now have a 70% chance of a trend or range day, once that has been set. So we can start to say, okay, if we're breaking down and we're, selling out of here, there's a 70% chance that it is either going to trend down or bounce back up and do a little bit of ranging. So that's how I use it. And then when you couple it with the statistic, 80% of breakouts fail, which is just a real statistic. That's where you can start to feel comfortable to, buy calls down here, buy puts up here. And so that's how I trade the opening range. I mean, I take a trade on it basically every single day. Okay, well, if that is going to do it, thank you so much for being here, everybody. I really appreciate it. Nice little turnout for a Thursday Q&A. So thank you all for being here. And then again, if you can help out my guy Crash, love that guy. So if you got a couple bucks, feel free to help him out. And with that, I will actually be out of town tomorrow, so probably no activity from me. So everybody trade safe. Don't get too degen on Friday, and we will catch you all next week. Thank you. Yep, thanks everybody. It's great having you.